There's all sorts of reforms that governments can undertake. The one that's getting a lot of press now, the one I've been banging on about for years and years and years, is superannuation tax concessions. All of a sudden, everyone's talking about superannuation tax concessions and how we need to get rid of them. We need to reduce them in order to increase revenue, which is really good to see. Because there's myself and Glenn Dyer at Crikey have been just crapping on about super tax concessions for years and years and years because they're so expensive. We're going to lose about $30 billion in revenue this year to superannuation tax expenditures. That predominantly flows to high income earners. They don't flow to low and middle income earners, it flows predominantly to high income earners. Now we want to incentivise people to save and to put more money into super. That is a good thing, but the whole system is totally skewed. We're spending $30 billion a year to incentivise people to save money. So we're doing ourselves out of all this revenue now for the sake of saving ourselves some money down the track. But worse, we're incentivising the very people who are going to do it anyway. So, there's this, the only people who are going to be opposed to getting rid of super tax, well, not getting rid of them, sorry, amending them, reducing them by 10, 15, 20%, are going to be, the big banks because they run retail superannuation and maybe the financial planning industry. But it's a sort of reform that it should be easily explained and can give the government $3, $4, $5 billion a year in extra revenue. That's just one example of the areas where reform can be effective.